Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Kate Zanobini. I love that name, Zanobini. And Kate grew up in Marin, went to Oregon, and now she's in the loan world. So Kate, it's great to have you. I'd love to hear how you got into the loan world and all that story that comes with it.
Yeah, so super random right outside of college. I kind of was one of those weird kids who didn't really know what I wanted to do, but knew I wanted to work with people and uh, went to school for psychology, studied communications, and ended up in real estate finance. So um, outside of college, just kind of wrote down one day things that I was interested in. Fell into the kind of tech world in San Francisco, started working at Trulia back in the day as my first job, kind of right outside of school. Found that I had a great knack for sales, and then always was really interested in real estate. My family moved like 10 times growing up. My mom was like an avid renter. So I was just so used to looking at property. Loved working with people. It all kind of worked out. Trulia got bought by Zillow years ago, about 10 or so years ago. And then I just kind of fell into lending after that, starting out at Lending Home, and now Lending Home is Kiavi, which is where I am today.
Oh, so this was kind of a merger madness that occurred in the whole mortgage world.
So at Trulia, I sold like real estate space to agents, and I found that I was actually pretty good at it. And then when Zillow bought Trulia, they let a whole bunch of people go in San Francisco because our offices were super expensive to run. And I didn't want to move down to Southern California to work for Zillow. I actually got a job offer after only 3.5 months at the company.
Wow.
And I was like, no, I want to stay in the Bay Area. I'm not a SoCal girl. I'm not going to do it. But the cool thing was that all these companies knew that these salespeople got let go because we were too expensive to maintain, but we weren't bad. We were just let go. So we had this job fair. We had recruiters contacting us like crazy. I got recruited by some guy. I interviewed at multiple companies, took the experience, and then fell into Lending Home just randomly from a recruiter and started doing loan origination and sales, in this sphere of the industry, which was mortgage lending. And it was something that I never knew about, but kind of fell into.
So tell us about the whole mortgage lending world. What is happening out there right now?
Yeah, well, it's an interesting industry, and what I do primarily is work with brokers whose clients, so it's mortgage brokers whose clients are people who are looking for private money. So we're on the private money sector. We don't do anything conventional. So all of the loans that I work with are with brokers only, and it's for residential investment reasons. So fix and flip, long-term DSCR are our kind of bread and butter, and it's all residential investments. So that's single family, 2 to 4 units, condominiums, townhomes, things like that. Anything 5+ and over or mixed use commercial, we don't typically work with. It has to be residential investment only. Also, if you're looking for an owner occupied or second property, we don't finance anything like that. It's only going to be for residential investment reasons is what we do. And it's a completely different product, and the market is completely different than what you would see in the other kind of conventional mortgage world. So we don't really follow the same guidelines, or we don't see the same issues or rate hikes that you might see in the conventional market today.
Well, is the private loan world regulated very much?
Not nearly as much as you would see with the conventional. So on the conventional side, to originate, you need to have like your NMLS licensing. Typically in specific states, you have to have your state licensing. In the private mortgage sector, you technically don't. I do because I think it's really important to be knowledgeable about, what is right and wrong in both industries. And I think it's just good to have it overall and have that understanding, but it's not nearly as regulated as your, kind of actual conventional types of mortgage lending.
So how are you mortgaging, or how are you mortgaging, how are you marketing yourself to mortgage brokers? That sounds like an interesting world.
Yeah, so luckily with Kiavi, I don't technically have to do anything. So we have a great marketing team. We're very, very well known in the industry. If you go to Scotsman Guide, we're actually the number one private money lender in our industry.
Wow.
So we kind of, in our world, our technology and like just being around the block and having broker referrals, we just are kind of, already known pretty well. So I actually don't really market myself at all. I'm kind of well known in the industry and with some of my other competitors. I've got a great book of business from being here for so long. And then we have a fantastic marketing team that actually does most of the marketing to like, clients and getting new brokers onboarding with us here at Kiavi.
So how big is Kiavi?
Um, Gosh, at this point, we're probably about 400, 500 employees.
Wow. Yeah.
Um, we're a nationwide lender and we've got heads probably in almost every single state, maybe like 5 or 6 states we're not in, since we're a remote first company.
So what's the current rate on a private money loan from Kiavi? Sort of a range. What I know it depends on the transaction, but what sort of range are we in these days?
Yeah, I mean, honestly, like if you're looking at a fix and flip loan, we lend about 80 to 90% of purchase, 100% of rehab, and rates are going to be anywhere from like 9 to 12.5%, depending on leverage, FICO, and experience. And then we also look at some states as well in regards to where the rate would be. And then on a long-term rental, we look at your DSCR, we look at loan amount, we look at property type, FICO, leverage, and on those long-term kind of 30-year DSCR loans, we're anywhere from really like 6.5 to I would say mid sevens, so 7.5, somewhere in that range.
So for those in the audience, what is a DSCR?
Debt service coverage ratio. So
Ah,
what we're looking at the property rather than like the borrower. So what that is going to entail is, we loan based off of what is your debt service on the property. So we take, your rents over your PITI, principal, interest, taxes, and insurance, and we loan based off of that.
so are you typically coming in on top of a conventional loan, or are you providing, you said you go to 90%.
So on a rental loan, we're typically anywhere from 50 to 80% leverage.
Yeah.
So, we'll do purchase, cash out, rate and term, refinances, anything like that. And it's typically for clients who are buying a lot of rental properties. And then, you can't go to a bank because banks only allow for so many loans at a time. And we don't cap you on the amount of loans you can do on our investment side. So you could buy, 5, 6, 7, 8 properties, single family anywhere and do a, 7 or 8 rental loans with us with no problem.
So what's the typical sort of hold period that you have for a client?
For fix and flip or for long-term rental?
Well, let's start with fix and flip and then go to
Yeah.
long term.
So we do a 12-month loan on our fix and flip program. And again, it's only residential investment properties. We have no prepayment penalty. So if the client wants to pay their loan off in 3 months, 6 months, 8 months, that's totally fine with us. It's actually a good thing because it shows that they can get out of the loan quickly. What we don't like to see is you hit the 12-month mark and then you need a 3-month extension and you can't sell your property and oh, I thought I could, sell my property for $800,000, but the Florida market's going down and no one's buying. So, you're stuck at a 700, ARV and you lose money. So, you know, we like it when you can pay off your loan as quickly as possible. But we typically do a 12-month loan with no prepayment and you can pay it when you need to pay it.
So what happens if somebody gets really stuck? Do you take the property back?
Yeah, so if a client, fails to make their interest-only payments, or they can't sell their property and they lose, we will foreclose, we will do an REO, like if we have to, but let me tell you, that is the last thing we want to do. So
Like every bank.
so we do not want to do that. We want to make sure that, clients make their payments, have the ability to pay. That is definitely a much more attractive solution. And we do underwrite all of our loans. So we check credit. We just do soft pulls on our credits, no hard pulls, which is actually one of the more fantastic things about our company. But yeah, our goal is never to foreclose. It's to make sure that we are underwriting and working with brokers and clients that are successful.
So just out of curiosity, how is the market these days? Are more foreclosures coming out, or how's it looking these days?
It's looking really, really good. We also work like our technology and our solutions. We kind of see what's going on with the market, what type of deals are paying off, which ones are asking for extensions. We keep track and we keep data on all of that. One of the benefits of our company is we are really tech driven, being a company that started out of San Francisco. So we do look at how markets are doing and we will change our policy and what we can and cannot do based on how those markets are. So if you look at Texas, if you look at Florida, those are some markets where you are seeing properties kind of being listed longer and not selling as quickly. And maybe people kind of overpaid in the last year or two for properties in those locations. So we look at that, right? So then we might make a haircut on an ARV, or we might stop lending to specific areas of Florida based on how they're doing, or just edit our terms and processes on the ways that we will lend based on those markets. But overall, I would say markets are doing really well in regards to our industry. I mean, it's definitely different on the conventional side, but overall, we take everything into play when we make our loans, and right now things are actually doing really well. And loans are paying off, and if they're not, we reach out to brokers and we say, hey, can you help us out to figure out why this client's not doing well, or do we need to get an extension, or do we need to refinance them into a long-term hold?
So it sounds like the fix and flip world is still pretty hot out there.
Yeah, it's very, very, very much in demand. I would say typically my July is slow. You've got, summer, kids are out on vacation, from school, and people are traveling and doing kind of other things. But this year, we've still been just kicking butt and making loans. And I haven't really seen that much of a change in regards to deal flow and getting deals in. And it's actually been a pretty hot market for us recently.
So fix and flip is a big part of your business. How much is long-term loan?
Our long-term DSCR program, I would say, is not as much of our bread and butter as our fix and flip. But the cool thing is that we work with clients who can do like a fix and flip and then have the ability to refinance with us in-house on our DSCR program. So that's like another really attractive quality is that you can do that fix and flip loan. And then if you decide not to sell the property and you want to keep it as a long-term DSCR, you can actually do that with us as well. To be completely honest, I would say like our long-term DSCR program may not be as competitive as some of our competitors.
Right.
And so I would say right now maybe 70% of our business is fix and flip, short term, turning around property, and about 30% may be our DSCR long term rental. So that's kind of what I would put the numbers on. I would have to obviously run it, but I would say most of the stuff is fix and flip. And we're always looking to be more competitive on our rental program, but we actually service those properties exterior outhouse where our fix and flip is serviced like within Kiavi. So we have a little bit more flexibility on that program.
So do you deal in the wholesale world at all?
I do not. Our wholesale is broker. In our division, wholesale is considered broker, direct is considered retail. So
Yeah.
I only work with like broker wholesale. I would ask more so,
Oh, right,
what do
right,
you
right.
consider wholesale when you're asking that
Yeah,
question?
so you're not going direct to the consumer, so to speak. Yeah.
And we do. At Kiavi, we work with direct. I personally, though, within the
Oh,
industry, within my company, only work on the wholesale channel, but we do have an entire division that just works with retail and not broker.
so just out of curiosity, you're in the private lending world. What's the difference between the private lending world and what's classified as hard lending?
I mean, that's a funny question because I think back in the day, like probably back in like 08, 09, they would have considered what Kiavi's doing now like as hard money.
Right.
We don't really consider ourselves hard money anymore because, we do look into, the credit score and we look more into, is this a good deal? What is the client's, ability to pay look like? Where I think back in the day, hard money, they were just making loans left and right to anybody and not underwriting these deals, right?
Yeah.
So I don't think you see hard money lenders as much out there. And I think most of our competition is more of the private sector. So it's a hard, term to kind of say like what's the difference because I feel like you're not seeing that kind of hard money like you used to see back in the day.
Well, I still get calls from people,
Yeah.
they specifically say, hey, you need some hard money, and I'm going, no, no, thanks.
Yeah. I think most of the people in like our sector would like to consider themselves more private money. We have institutional capital, securitized capital. It's not just like your mom and popping like here's, 10, 20, $100,000 that we'll just kind of like exteriorly throw out and see where it
Yeah,
fits.
yeah.
Right.
Well, it's a much
Yeah.
sophisticated approach to lending money rather than just sort of like, oh, here's some dough, and if you don't pay it back, what something bad will happen to you kind of thing. But
Exactly.
yeah, no, it's a completely different world altogether. So, well, this is very fun. So just to end here, what's your favorite food?
What is my favorite food? Well, my favorite food, I would have to say it's kind of like we talked about a little earlier, a little bit different, but I would say my favorite food is anything seafood related. I love shrimps, shellfish, salmon, as like mussels and frites, oysters, you name it, and I'll be there.
You'll be there all together. Well, it is great to talk to you. Where can people get a hold of you? Where can brokers, I guess, get a hold of you? Mortgage brokers, for the most part, get a hold of you.
Yeah. So if they want to have me be their rep exclusively, they can reach out to me at kate.zanobini@kiavi.com. So I think my name should be here, but it's just kate.zanobini. And then our company is spelled Kiavi. And it's actually a special way of spelling Kiavi, which I think is Chiavi, which means key in Italian.
Oh,
We just changed it to be with a K.
oh, that's interesting. I didn't realize that. Okay, a little twist.
Yeah.
Key as in a key to lock. Key.
Unlock your home.
Oh, unlucky. Oh, interesting. All right. Well, you've got the Italian name with the Italian company.
Yeah.
I, I was that on purpose or that just happened? I'm sure that just.
That's just, just luck of the draw. But like I told you earlier, and of course I don't really care for Italian food. So,
All right. Well, my last interview with Julian, he was very, very big on lasagna. So we're not going to make that happen. So anyway, all right.
no.
Well, let's keep in touch. I look forward to sending you some leads, and I think some of the listeners will be very interested in doing that. We'll see where we go from here.
Okay. Well, thank you so much, Bruce. I really appreciate it.
Thanks for being on. Talk to you soon.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.